Being able to have your premiums waived on policies that you own in the event of disability doesn't really matter unless that's the situation you're in. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. I teach people how to live and leave a lasting legacy with infinite banking. Let's talk about waiver of premium riders, particularly for the intent and purpose of folks implementing the infinite banking concept. Now, as always, be familiar with your contracts that you already own or very familiar with what's possible on contracts that you are considering having for yourself. Now, waiver of premium is a way for you to have your premiums waived in the event of a qualifying disability. Now, that is not a certainty. Let me point out right out of the gate. So owning, let's say, a whole life policy from a mutual company that pays dividends for the intent and purpose of doing infinite banking, having a whole life policy is a win scenario. When are we going to pass? When are we going to die? When are we going to graduate? When are we going to go see the Lord Jesus, hopefully, right? That's a win scenario. The if scenario are if you have a disability along the way, do you or do you not want a rider with that type of protection attached to the whole life policy? Or it could be a term policy, a convertible term policy, for example. Do you want that additional protection? Now, for the record, I did make sure to put this waiver of premium policy on my very own most recent policy purchase that's on my life myself. Again, I value having protection on my protection, even if it is in the unlikely event of disability. I want to have my protection protected. So let me start with a real high surface level point of view that policies that I own are my number one top tier ideal financial assets. And typically speaking, I want to have as much protection for variables on those entities that I anticipate owning for the rest of my life. I want those additional benefits in general, knowing what I know now. Now, does my oldest policy have all the structure and riders that policies I more recently have procured for myself? Do they have the same? No, because I've learned more and I do more. So with that being said, every individual as well is going to have different details and nuances in their life where one rider may make sense and another may not. You should be making that choice for yourself. This video is to provide you information about this rider, at least at a high level, to introduce you to the subject so that you can make more educated decisions for yourself. So a waiver of premium rider will allow you to forego paying out-of-pocket premiums if you qualify on your existing policy while you have that disability. Now, there are various things to consider, and I don't necessarily want to get into the weeds of what should be in a one-on-one consultation call with your advisor, with your agent. But a waiver of premium rider may only cover the base portion of the premium that you typically pay for a policy. If you're not sure about what's base, what's PUA, I have videos on these other related subjects in this EncycloMedia series. Make sure to check those out. This is a comprehensive approach to giving you resources about the verbiage and the vernacular and the details around properly structured policies for the implementation of infinite banking. But that waiver, you need to be aware, may or may not just cover the base percentage. It may be a different rider that you could add to cover the premiums that you have going towards in the paid up additions portion of your premium, the premiums that are being paid into your paid up additions rider, or premiums that may be going towards the same insured term rider if you have one of those on your policy. So be familiar with what your waiver of premium rider is going to cover, how long it's going to cover that, what age cap there may be if you're looking to add this rider to a policy that you're going to buy. And then there may be qualifying disabilities that happen at various ages where the benefits of that rider are going to be different. So these are just things to be aware of so that you can better have that conversation with your professional. Also, if you have a waiver of premium rider on a policy that you own, whether that's on a whole life insurance policy or a convertible term insurance policy, you may or may not have elected or be able to elect that upon conversion of, let's say, a term policy into a whole life policy, you can elect whether or not to have that conversion be covering your waiver of premium as well, meaning you may elect to have a waiver of premium on the term policy while you own the term policy, but not elect to have a waiver of premium when that term policy converts into a whole life policy. Or you may elect to be able to maintain that waiver of premium rider when you make the conversion to a whole life policy from a term policy as well. So these are just different aspects to consider for yourself. Also, there may be minimum or maximum coverages that are in the parameters of that rider, so be familiar with those. Also recognize that this rider is cancelable. You may be able to have it for a period of time and then decide, I don't want to pay for this rider anymore. But the reverse is almost typically not going to be so. You can't seek to add a waiver of premium rider to an existing policy. So again, this waiver of premium rider in general is to help you account for the risk of an unforeseeable disability, to protect the protection that you have put in place for your family ultimately, but of course your bankability for those of us that are implementing infinite banking as well. Now again, in the event that you do experience a disability, you need to know that at what ages you may be receiving certain coverage or not. There can be a cap to, well, when you reach this age, there will not be this benefit of the waiver of premium rider on your policy. And if it happens in this window of time, these will be your benefits, etc. And here, let me emphasize that every rider costs something. When value is being presented, there is a cost associated with that value. So a waiver of premium rider allows you to waive premium under these situations in every individual contract. So there is going to be a cost associated with that. Now, in the industry, for those that are implementing infinite banking, you could even hear riders in general addressed as creating drag. And that's just meaning particularly for those who are implementing infinite banking using whole life policies, for example, there is going to be that cost for the rider that doesn't build up a cash value in your policy. So whatever percentage of your total premium that you're paying that has this particular rider represented in it, just understand that your premium to that rider is getting you what is in that part of the contract, that rider on the contract, and it's not directly building into the cash value of the policy. So it can create, quote unquote, drag on your efficiency for the purpose of infinite banking, for the purpose of creating a significant cash value that you can leverage for your need of finance in life. And yet I still am saying here at the same time that while that is true, premium is purchasing the benefit of any given rider. And yes, it is creating a drag if your only intent and purpose was to create as high of a cash value as possible with minimal drag. And yet holistically, at this point in life, being in the age category of 40 and above, having multiple children, been married for a long time, I just recognize and appreciate accounting for the unforeseen or accounting for the unlikely events that, again, in the event could affect my top tier assets, our policies that we own and control. And in general, I want to be able to protect my protection. I hope that this conversation around waiver of premium riders has been helpful to you. If you would like to have a one-on-one consultation call with me about what it could look like for you to implement infinite banking, you can find me at durhamtalents.com. Live and leave a lasting legacy.